Let's do it and start with a big winner here in the pre-market. Taylor Morrison Home. The stock is up 22% in the pre-market. Berkshire Hathaway is going to buy Taylor Morrison. It's an all-cash deal worth $6.8 billion. It's about $72.50 a share, a 24% premium to the home builder's last closing price Friday, so pretty nice. And it is also the first major purchase under Berkshire's new CEO, Greg Abel, of course, after legendary investor Warren Buffett retired last year. And it is seen as a vote of confidence in the housing market, which, let's face it, has been going through it lately, right? They say it's a way for the company to unify Berkshire's home building operations. Berkshire has been sitting on a cash pile. Are you ready for it? $397 billion at the end of last quarter.
So a third of $1 trillion.
So they're like, yeah, let's make a purchase.
Do you put that in a Christmas Club account? That's a hell of a toaster.
I'll tell you. But you know what? Berkshire Hathaway, I took a look at that stock. It's actually down 5.5% year to date, right? Underperforming the rest of the market. That's interesting. But they're putting some of that cash pile to good use with Taylor Morrison. MGM Resorts. This is a story that is unfolding here this morning. The stock is up 13% right now. So the New York Times is reporting that Barry Diller, who owns People Inc., is preparing to make a bid for the remaining portion of MGM he doesn't already own. That's actually 74% of MGM that he doesn't already own. It would be a bid that would value the company at $18 billion. They're looking at $48.30 a share in cash. And that would be a 10.5% premium over MGM's closing price on Friday, and 30% higher than its volume-weighted average price over the last 90 days. That's what the Bloomberg terminal will give you, little data like that.
How are they doing, Paul, versus like all the sports betting in that? Is it taking the thunder away from?
No. But this MGM is really a bet on Vegas. They do have some exposure to Asia, but it's really a bet on Vegas. I got some just iconic brands, including my Bellagio, which is my home away from home.
Your Bellagio.
Yeah, I got the high roller suite there. They know me.
Do you?
Sure.
I don't see you as a high roller.
Oh, yeah.
All right.
You're a high roller?
He's a risky guy.
I used to bring a conference there every year, and I'd spend, $50 grand, $100 grand, risk-free to them with dinners and conference rooms. I'm like, you got to comp me for that.
Well, they love people like you,
Paul.
Paul.
So I finally worked out a deal there. So
when you're a high roller, what's the view look like out the window?
Well, you're not looking at the parking lot. You're looking at the pool.
Look at the pool.
And that
or
fountain,
the strip.
Do they still have the fountains that go off to the music and the whole thing?
That's a little loud, though, because it goes off
I had
all night.
I had dinner once there with a wonderful law firm, Leon Jaworski's law firm from Houston, and ages ago.
Yep.
You got one more?
I'm still waiting for my invite to the Bellagio, Tom, from Paul. So we'll see how that works out. IBM, continuing its recent hot streak, up 11% this morning. Barclays issuing its first rating on the stock, initiating coverage. Overweight, price target $350. And guess what? It's not about quantum computing. Remember, I think it was last week, the government said it was going to put this federal infusion of $1 billion into IBM and companies like it to build these standalone quantum foundries. But this analyst over at Barclays is actually calling out IBM software, which is sort of what it's known for, right? A different aspect of the business. It says, software is behind nearly half of IBM's revenue and most of its profits. He says IBM's infrastructure software will create a highly loyal customer base.